All right, so welcome to the exchange. So, first and foremost, I'm not a financial advisor. I'm just here to give you my opinion on what I see in the stock markets. Looking to the left to see what has happened, then looking to the right to see what may happen. Do your own due diligence. Make sure you invest money in things you know about. If you don't know, invest in yourself and learn. That's the best way you can make money out here and have some security in these markets. So, let's look at what happens to stock markets so we can get a better idea and some security in exchange. Welcome to the Exchange Show.
All right, let's get started with Bitcoin. Here we go. Bitcoin. If you are looking for the Bitcoin having to make a big push up, so you need to look specifically at some of the trend lines that started back here on January. In January, we were down to a price of 40,000 from each Bitcoin. We have since made an inner trend line, an outer trend line. We are bouncing off a demand zone. We had our inner trend line that was going up. It broke back here on April 2nd, came up, retested that inner trend line, then we were able to make an outer trend line. It has now held that outer trend line. It is still looking like we are going down. So if that is the case, if the Bitcoin halving is going to have an effect on us, it may push us up at least to our last high, which is about $73,877. So if we're going to go there, that's a good place to take profit if you're buying Bitcoin right now. Okay, it's a good place to take profit. And why am I saying that? Because you can't go wrong with taking profit. I mean, hey, currently though, we are under the 15, we are under the 14, and we are under the 50 line here. So yes, does it look good? No, it does not. But let's see if we had our pump before the halving, or are we going to have a pump after the halving? If we're having that pump after the halving, that means you can look for that 73.80 or 73,800 area as a place to take profit. At least if you're looking for, I want the tippy tops, I'm still saying 84, 82, around that area, because you know with Bitcoin you'll get a spike up. I'm saying it'll go to at least another even number. So I would say 82, 84 area. At this time, hey, you have rejection here from a demand zone. That's why I'm saying let's go for it. Let's go up. Now, if you were still looking at Nike, you still have a way to get into Nike. It did not fill the gap that is between, and we could adjust this because we did go up. The gap got smaller. So that's between $96 and $98. Currently, we have a pullback and we are in a boom buy zone. So we just got a buy, and that was on April 17th. It is a good entry again if you want to go in. We are above the 50, above the 14. Sorry, we're above the 14. We're not at the 50 yet, and we are under the 200. So at the most, I would say I would go for the fill of the gap, which is $98. That's a good way just to get your money, get in and get out. We are moving up, but once you pass the 200-day moving average, that's generally where you want to be at for buys. If you're above the 50, you can feel confident again to go up to at least a 200 for buys. But you may meet a lot of resistance here. Remember, that's not a lot of people that are making the decisions here. It's based on algorithms. So let's take a look at another one we were talking about earlier, and that is SOUN. All right, SOUN. That's an AI stock. It is currently going down. It has so far played out with our head and shoulders pattern. So we had our left shoulder, our head, then our right shoulder, and it broke down past the 50. We're now bouncing off the 100-day moving average. That's the white dotted line. But currently, it looks like we want to go and fill the gap down to the $2.47 range. Is that possible? Yeah, it could happen. I'm below everything. The only thing that's I'm above right now is the 200 because I'm flirting with that 100. It ain't looking good. So what's one thing we could do? Let's see volume profile. Then we're going to turn this off, clear picture. We're under the volume profile. In this gap, there's no orders. None. Zero for SOUN. The next place it has at least a decent buying area is at the bottom of that gap. And then, yeah, so SOUN is not looking too good. But if you're looking to short it, you might be able to short it down for a little bit further. Other than that, if you're looking for long-term buys, though, great opportunity. What's our next one? It's going to be, let's do Palantir. All right, Palantir. It's going towards this gap too. If it breaks this 20.48, like it's currently a penny under it. It closed under it. I want to see tomorrow on Monday, is this going to be enough to push it down further? You know, if it comes down further, I'm looking for it to fill this gap and come down to its last earnings, which is $16.50. It will at least probably do a flash crash down, you know, one of those long spike candles, or it's going to come right here and stop. So at this time, let's see what we got here. Let's turn our indicator on. Oh, look, the 200-day moving average is right at the bottom of this gap area. So I would aim for the 200-day moving average as my target, $18.67. It most likely will get at least to 19, but I need to see if it closes with a little bit more volume after this. It looks like it is doing it. Let's go to the 4-hour. And the 4-hour, it is under it. So this could be a good one. This could be a good one. Take your time, see if it's going to do a bounce up on Monday if you're interested. If it does a bounce up, look for it to bounce up probably to the $20.69 range, $20.70, or right to about 21 bucks. And then it might continue down again. So that was Palantir. We got one more. What am I going to do? Yeah, I haven't done this one in a while. MRVL. Okay, all right. So I was thinking it was going to do a fill the gap and then go up to earnings. Wrong. So, not wrong with being wrong, but at least I didn't have a trade in on it, right? So we are going down. The next area looks like it's going to have for resistance is $60.63. So with that, let's see. Our last earnings was, ooh, that's probably why I did that. Yeah, so I was assuming it was going to come back up to our last earnings up here around $85. Currently, we are going down. We are looking minimum to that $60 range. After that, if we do, that lines up with a demand zone down here at $50. So let's draw out that demand zone now. There we go. There's our demand zone. If it comes all the way down to here, it most likely will bounce because we had 1, 2, 3, 4, 5 days pretty much in the zone. And then after the 5th day, it just shot up past there and never looked back. It's coming down now. So $60 is the next place. Earnings was previously $55 and change, almost $56. So around this area, you may have some. There we go. And it does line up with that. Look at that. We may have some support. So let's see if that plays out true. If it does, that'd be a great entry for a play up. Now, here's the last one I'm going to do. The last one here is going to be SDS. So this is that reverse of SPY. Last time we looked at it, it was, I think, down at $26. There's a gap here at the $34 range. So that means there's a gap higher. Is SPY going to continue down? If SPY continues down, that means this will continue up, and it may get to its 200-day moving average of $31. That means if this goes up, SPY comes down. And if SPY comes down, that means we can have a good play for a bounce on either one of these. You can play this up and then short it on the way down, and the opposite for SPY. You can short that down and then play it as a call on the way up from the reversal. So let's look. Let's see. Currently, we're at the top of the range, but it's not even at the 100-day moving average. We have so far crossed the 9, the 14, and the 48. Generally, if you get a lot of moving averages that cross, you may get a quick little pop in the opposite direction just to make sure it picks up all the orders. So in the next day or two, we may get, day or two, Monday, Tuesday, we may get a sell off in SDS, so you can then get in for the continuation up. So let's look at SPY real quick, and if we look at here, I already have some areas I'm interested in. It's already past a lot of this stuff. So if we look, let's see, our next big area is 480. If it breaks this area up here, that's 493. Yeah, 493 to about 494 area. If it breaks this area with strong volume, it looks like it may come down to that 480. If you want to do demand, supply and demand areas, around 470 to 467 would be a daily area right here for a big, get back here, for a big demand area. But that also still lines up with our next biggest resistance or support, which is coming down. You notice a lot of them are in round numbers. So let's see what we got for volume profile. We're under the volume profile. Next place it has a lot of 487. Looks like it's a lot of sells there. But remember, this is just saying there's a lot of volume in this area. So the next place with a lot of volume is right here around this 488 to 485. So if you're interested, those are areas you would probably see a lot of friction. Take your time, do your investigation, watch it, plan your moves. I'm looking for in SPY a pullback from the top here. If we just get to here, this will be 5.87% pullback. If you get all the way down to here, this will be an 8.4% pullback. Now generally SPY does a 12% run and a 6% pullback. This was a very big run, so I'm not sure if it's going to do a half pullback or just like a quarter pullback. So if we just do our right to here, wrong one. There we go. If we do a measure of our run from here to here, that was 12.45% just from this area, and that's going to be from January. So that is 12.45%. If we started all the way back here at the very initial in October, where we're down at 414, let's see. That was 16%. Then it had a small pullback, 16%, and then it pulled back to what? What percentage? Less than not even 3% pullback, 2.43% pullback, and then it had another 12.45% up. Currently, we're not there. We got plenty of room to come down if we needed to. We're only at 5.94. So we had a good run, a small pullback, another good run. Now we have a bigger pullback. Now, if this is true, what we're seeing is bigger. You can see it right down here at the bottom. This pullback is definitely bigger. But is it going to be a pullback? Because it already has gone past the 50 line here. Or is this going to be a quick reversal down for an area of a liquidity grab or order area or a demand area, whatever you want to call it. But there have to be orders waiting below a certain area to be picked up so we can continue forward. So that's what I got for this week. For SPY, I'm just waiting for confirmation. Once I get confirmation, I'll be ready to play. But I'm doing my own research. You do yours. I'll see you next week on the exchange.